Hey everyone, welcome back to Corporate Decoder. Today we are analyzing Vivos Therapeutics Incorporated and their latest Form 8K filing. We will dive into why they are adjusting their stock offerings and what it means for the company moving forward. Before we dive in, if you like unraveling complex corporate filings into simple insights, remember to subscribe to the channel. Also join our Discord community linked in the description below to discuss these insights with fellow viewers. Now let's get to Vivos Therapeutics. This report is all about a business decision to increase the amount of their own stock they can sell in the open market. Think of it like a company deciding to offer more shares for sale to raise extra cash. Vivos Therapeutics Incorporated, or Vivos as well call them, is a company that makes medical advancements. They are telling us on the 24th of October 2025 they decided to up the amount of their common stock they can sell. If you remember, they had an agreement to sell shares, which is common for growth companies to raise funds for their operations or future projects without going into debt. This filing essentially says they want to sell more of those shares than they originally planned. This move is directly related to something called an at-the-market offering agreement. Essentially, Vivos has a deal with a financial firm, H.C. Wainwright & Company, to sell their stock gradually over time in the public market. This filing is an update to that agreement, signaling an increase in the total value of stock they are allowed to offer to investors. It is not a single big sale, but a way to continuously raise funds as needed. The specific reason for increasing the offering price is not stated in detail, but usually it's because the company sees an opportunity to get more money for their shares, or they anticipate needing more capital sooner than expected. It could be to fund promising new research, expand their operations, or even to prepare for a future acquisition. We are seeing them formally report this adjustment to the Securities and Exchange Commission, or SEC. The shares in question are common stock, which is pretty standard. The par value is a very small amount, $0.0001 per S-hair, which is typical for stocks and doesn't really tell us much about the real value of the company. What is important here is the trading symbol, which is VVOs. This is how you would find Vivos Therapeutics on the Nasdaq Stock Market LLC. The filing also confirms Vivos as an emerging growth company. This gives them certain regulatory flexibility compared to larger, more established companies. They have also elected not to use the extended transition period for new or revised financial accounting standards, meaning they will adopt new rules sooner rather than later, often seen as a sign of confidence in their financial reporting processes. Now, this filing isn't just about the decision itself. It also includes important legal backing. Attached as Exhibit 5.1 is an opinion letter from a law firm, Elenoff Grossman and Skoll LLP. This is a formal legal assessment confirming that the issuance and sale of these additional shares are legally sound and compliant with all relevant regulations. It's like their legal team giving the official stamp of approval, assuring investors that the process is on the up and up. Along with that legal opinion, there is also a consent from the same law firm. This basically means they agree to have their legal opinion included in this filing. It's another layer of formality and transparency, showing they stand by their advice. Reading between the lines, Vivos Therapeutics is being proactive with its financing. By increasing the potential cash they can raise through their stock, they are positioning themselves for future growth or to meet immediate financial needs. This is not uncommon for companies in the biotech or therapeutic space, which often require significant capital for research, development, and regulatory approvals. The move to offer more shares suggests they either have a strong belief in their current valuation or foresee a need for substantial funds to execute their business strategy. The fact that their legal counsel has provided a positive opinion on the legality of these shares strengthens the credibility of this move. It's a signal that management is focused on securing the financial resources to advance their ambitions, whatever those may be. It's crucial to remember that while selling more stock can provide needed capital, it also dilutes the ownership of existing shareholders, meaning each share represents a smaller piece of the company for investors. It's always a balance between supporting growth and managing dilution. Alright, that is our breakdown of Vivos Therapeutics' latest filing. What is your take on these stock adjustments and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.